The S&P 500, S&P 500, just smashed through the historic 7,600 level. But is this incredibly concentrated AI market rally about to run over all of us?
Hello everyone, welcome back to AI Market News. Today we're unpacking the sheer forces driving this record-breaking market, and more importantly, the critical risks lying just beneath the surface. Section 1, the AI market rally, historic S&P 500 highs. As you can see in the chart, the S&P 500 officially closed Tuesday at a staggering 7,609.78. But here's the catch. According to current market information, over 40% of the year-to-date earnings revisions are coming from just three names: NVIDIA, Micron, and Alphabet. So, what's the underlying mechanism here? Well, when only a handful of massive tech stocks drive the entire index higher, the broader market becomes incredibly fragile. Basically, if these specific leaders falter, the entire market has very little support to fall back on. And this extreme concentration pushes the Shiller PE ratio, Sheila P ratio, all the way up to 42.78. That means we're paying a historic premium for earnings. To put it simply, this metric compares current stock prices to average earnings over the last 10 years. Because prices are currently so high relative to historical earnings, the market becomes highly vulnerable to sharp, sudden corrections if that AI momentum starts to slow down. Yet, despite that risk, the momentum just continues to surge. At Computex 2026, NVIDIA CEO Jensen Huang actually declared Marvell the next trillion-dollar company. That one statement added over $60 billion to its market cap in a single trading session. Absolutely wild. The reason for this massive surge comes down to the connectivity bottleneck. As AI workloads are distributed across massive data centers, the limit isn't really the raw computing power of the chips anymore. Instead, it's about how fast those chips can transfer data between each other. They require custom optical interconnects, which Marvell provides, just to prevent massive data traffic jams. Section 2, Broadcom connectivity, tonight's catalyst. This exact same mechanism makes tonight's earnings report from another connectivity giant absolutely critical for all of us to watch. Broadcom reports their results after the close today. Based on available data, a beat and raise on their projected $10.7 billion AI revenue could push the entire semiconductor index to new highs. Because they provide the essential infrastructure that allows AI data centers to actually function, their forward guidance gives us a direct read on the future health of the whole AI market. Section 3, Nikkei BOJ pressures, domestic market shifts. Turning to domestic markets, the graph shows the Nikkei 225, Nikkei Ninigo, climbing toward the 68,400 level. But Japanese markets are approaching a very real live decision point with the upcoming Bank of Japan, Banku of Japan, meeting on June 16th. Right now, markets are pricing in roughly 80% odds that the BOJ will raise rates to 1.0%, while the U.S. Federal Reserve, is widely expected to hold rates steady. This divergence in central bank policy is the primary mechanism determining capital flows between the U.S. and Japan right now. Section 4, USDJPY carry trades, foreign exchange market. As you can see in the chart, the yen remains quite weak against the dollar, hovering near the 159.7 level. However, an imminent BOJ rate hike could trigger a significant rapid reversal. So why does this matter? Well, if the BOJ hikes and the Fed holds, the interest rate differential between the two nations narrows. This increases the cost of borrowing yen, essentially forcing traders to unwind their yen carry trade. They have to sell off their US assets and buy back yen, which can strengthen the yen rapidly and cause broad market volatility for all of us. Section 5. Key macro indicators. Upcoming economic data. Before we wrap up, let's review the economic calendar to see the key macroeconomic indicators that will determine our market direction. Based on available data, we have the US ISM Services PMI tonight at 11 p.m. Japan Standard Time, followed by the highly anticipated non-farm payrolls, nonfarm payroll, on Friday at 9:30 p.m. Japan Standard Time. The underlying mechanism to watch here is that if Friday's job report comes in hot, specifically above 130,000 new jobs, it signals that inflation might be sticky. Persistent inflation means the Federal Reserve will hold interest rates higher for longer, which drives Treasury yields up and puts a strict ceiling on any further stock market gains. The graph shows the VIX currently resting at 1610, indicating very low market fear. But given the historic valuations and extreme market concentration we discussed today, we absolutely must prepare for sudden volatility if these macro indicators miss expectations. The big question is, are we resting on a solid foundation, or are we just one bad data point away from the AI bubble bursting?
Thanks for watching. Please subscribe and hit the like button.
This video was automatically generated by NotebookLM AI. AI-generated content may include errors. This video does not constitute investment advice. For full details, please check the description below.